an hour left in the market, and I am still long some 44.90 calls. So if you have the futures in front of you, I may have to run away at like 5 minutes to 3 and figure out if I have some pin risk. Today, we have Michelle Schneider, who's the Chief Market Strategist for marketgauge.com, someone who I read her stuff for a long, long time. I believe this is the first time I've ever been on a show with her. So let's bring in Michelle. Michelle, thank you so much for joining us. Would you like to clarify your comments on the men thing?
Well, considering I've been in this business for decades, I'm actually quite used to being around all men, young and old, you name it. And it's interesting because I spent 14 years on the Commodities Exchange, where I was one of the maybe 3 or 4 women traders in the pits. So yeah, I got to know men quite well through the years, so I would never insult the delicate ego at all. I know
she knows us well already.
She pretty much is not going to get upset for whatever we fucking say. It doesn't even matter.
No doubt about it. But by the way, Bobby and I were CME people for forever. I still am on the trading floor at CME. And for 25 years, that entire Eurodollar and Eurodollar options floor was run by a woman, Margie. I mean, everybody looked at Margie like she was a god. I don't think any of us ever even realized she was a woman. She was just, to us, she was a machine. And I thought that was pretty cool, by the way. Where are you coming to us from?
Well, right now I'm in Santa Fe, New Mexico, but I lived in New York, born and bred from New York. And it's interesting what you say about that, because so many people say to me, well, how was it being, one of the few women on the floor, assuming that I would talk about sexism and things like that. But it was totally not like that at all. And like you say, if you were an active trader who had a good sense of humor and could play nice with others, and took your hits like everybody else, it didn't matter who you were or what you were.
Bobby, you go.
Yeah, well, it's interesting that you say that, because Jimmy was right. Margie was a name we all knew, even if we'd never met her. We didn't know her full name. You knew her badge, and you knew that she was Margie, and that was it. And she needed to be respected and watched. And that did not come from any kid gloves, nor did it come from any treatment outside of the norm. It came from her being better than 85% of the people that were in her immediate circle, probably 95. She was just really good. And that made everyone afraid of her in a professional sense, but not in a personal sense at all. It didn't mix that way. The way you describe it is the way it was.
But Michelle, then why are there so few women on the trading floor? What's the deal there?
Well, a couple of things. Number one is it's really physical. And so you have to have a certain level of ability to stand on your feet all day and also assimilate a lot of information all at once while you're standing on your feet. And so I think from just a physical standpoint, and by the way, that's the same true for men. I mean, why weren't more men on the floor when it was, especially in its heyday, a gift? And so you had to have a certain personality. You had to be very outgoing, be able to take, good ribbing a lot. And I think at the time, especially when I was down there, it was really the glass ceiling awareness was coming out. And I'm not so sure at that point there were too many women that knew how to cross over from being in a world of mostly women to going into a world of mostly men. I mean, even in sports, it's now you're starting to see more and more women involved in the sports casting and stuff like that. But I would imagine it's kind of similar. You have to be really comfortable in your own skin.
So I always found it helped me to have people think I was partially crazy, like muttering to myself and very herky-jerky movements. Bobby, did you ever do shit like that?
It's funny, neither one of us, Mish, we've never met you in person, but Jimmy and I stood near each other for 25 years. And we always argued about who was taller, which is the kind of argument you have when you're both short. He's not. I have proof. I can bring receipts on that. But that's the kind of argument you hear when two people are short, is about who's taller. But because of my height, and I'm sure, Jimmy, this was with you as well, I was insanely aggressive most of my life.
All the time.
Like anywhere you want to just make up a story, and I was the more aggressive person, and that was me overcompensating for something I didn't want to be.
But that's a short Italian guy thing too, and I'm not even joking. By the way, it's real. We always have an edge. You agree?
But I got to tell you something. One of my best observations about men were how much they do talk about each other's physicality and how huggy and touchy they are with one another. And I think that really helped me too, because if I got grabbed, I didn't all of a sudden think, oh my God, sexual abuse. I thought, oh wow, they're really kind of putting me right into the league with them, because that's how men tend to behave with each other. So yeah, so I'm not surprised to find out that you guys rib each other about things like height.
I just threw a notebook at my woman assistant today on the trading floor. She didn't seem to mind. It didn't cause any damage. She felt like she was one of the guys. Let's talk again. If you've ever watched any of our shows, it's about 30% bullshit nonsense like this, but about 70% we actually dive into real things. I'd like to take a break from the bullshit nonsense because it was a big day today. We talked about the CPI number. Did you get any answers from that? Was the core bigger deal than the headline number? Thoughts?
Well, actually, I have been one of the people in the camp of talking about inflation was definitely not over for the entire year. And actually, one of the things I wanted to say, Jim, is that we were both on with Charles Payne yesterday. I think you were after me.
Right.
Yeah. Mm-hmm. And so, we know all of the different headwinds that are out there, but even without all those headwinds, it was obvious that oil was going to be the X factor. And of course, that was the big player in the CPI number. And all of the typical relationships that people have been trying to squeeze together to make the narrative fit into something they're comfortable with, we're seeing more and more and more of that is not happening. So like even with food, it was complicated. So we have a lot of prices of food way up there, live cattle, but yet you had milk and eggs down. So this is where people come out and go, oh, disinflation. And that's the thing, that these labels have to change. So to me, the CPI, when you say tells you nothing, to me, what it tells me is that, A, there have been areas that the higher interest rates have had a good impact on in terms of bringing down. And B, there are areas that no matter what the interest rates do, unless they really go Volcker, can't control.
Go Volcker. We should trademark that from this right away. Robert.
I mean, I'm jumping into another subject immediately, but I think it's extremely relevant to what you guys were just talking about. The UAW strike is concerning for me, and I want to get your take on it, Mish, because I have a really close friend down here in Florida. Spent most of my life in Chicago, moved here about 3 years ago or so. And he works for a wholly owned subsidiary of Ford Motor. That's as far as I got to go. He's an engineer there. And the first thing I did was check with him today and say, hey, does this affect you in any way? And he told me we're already running with one less shift and we're closed tomorrow regardless of what they decide. So they're already planning for less production right around the time where auto prices were at least flat, right? I mean, there's been arguments about used cars were up a little, down a little, new cars were still up, right around when they're flat. And you combine that with energy prices, specifically WTI. How concerned are you about something like the UAW strike and sort of cascade effect that we saw from the UPS win?
Absolutely. And by the way, Ford also got upgraded today by analysts to just kind of show you how out of touch analysts can be.
Yes, exactly.
Right. Well, yeah, this is exactly right. I mean, I sort of am, as a commodities trader, a natural worrier about things that could happen and then how that snowballs. And this strike, certainly on the heels of not only what's happened in this country with threats of strike, even though they've been averted, but happening around the world. Like, for example, in Australia, the LNG strikers have gone out. We know we had strikes in other countries, France being one, but of course the French always love to strike. But the idea is this, is that unions, I don't think I can remember hearing so much about unions since what, Reagan? I mean, you joke about me calling you old. The truth is I'm old enough to know all of these things because I was around then. And so the cascading effect, as you say, Bobby, is very real, because what would embolden more workers to go out, especially as we see that the cost of living has gone up and the wages have not kept up, than a successful strike by UAW that wants 40% more, and they get it, or they get some decent compromise, and then there you go. I mean, that would certainly get me going.
Okay, so it sounds like you're painting the potential for the dreaded wage price spiral. So with that in mind, do you think the Fed is done? Do you think we've felt the full efficacy of the Fed's rate hikes yet? And how do you think that should affect the stock market?
Well, I've been doing a lot of research. I was a person that said hyperinflation is going to make its round two. And now people are starting to say that. But I'm actually moderating it a little bit, of course, unless we have some kind of major black swan event, geopolitically or weather-wise. I read today that the weather alone has cost this country, I think, something like $60 billion, if not more, just dealing with the natural disasters that have happened. So short of something like that, or a strike that snowballs, or, there's been quiet unrest in this country through many different avenues that are not typical. Striking, of course, would be one. I've been studying the idea of normalization, because I heard Leo Cooperman say it the other day. And, it always makes sense to pay attention to a billionaire when they speak. And what made sense to me, what resonated with me, was the idea about core inflation and Fed funds rate being at a level that actually normalizes things, so that inflation and Fed fund rates being the same, therefore we do not have to worry about economic growth. We don't have to worry about recession or anything like that. Things stay the same. Now, normalization, we know how long things can stay normal, right? Not very long. But in this case, I thought right now, if the world ended today, we're kind of in a normalization, which is why the market didn't overreact to the downside based on the higher CPI numbers, because they assume that the core and the Fed funds rate are kind of similar here, which means that the Fed may pause. And so I think that's kind of where we're at right now. How that sustains, again, as a commodities trader, I see flashes and signals. Look at DBA, that's the agricultural ETF, clearing 22, getting up to a point now where that can fly. Oil, obviously, with Brent over 90 and WTI trying to struggle at $90 a barrel, that can still go. So yeah, so right now we can say normalization in the market will subside in terms of its fear until XXX.
So the first thing I want to say is that I wrote something, I don't know if you guys can see this. Commodity traders are natural worriers. I think Jimmy and I would absolutely echo that, because that's all we do is worry. And I think it's an interesting part when you, and I'd like you to comment on this, when you sort of, a lot of the people we know started as commodity traders, commodity analysts, brokers, whatever it was, and then kind of branched out into everything else and became pretty accomplished traders in everything. I mean, one of Jimmy's best things that he trades are equity options, right? He's just really good at it. And I always go back to something like crude oil, because crude oil to me always, like one of the interviews I did about a week and a half ago, I said, they're not pricing in any hurricane risk at this level. They're not, right? And then we had one hurricane come through. It actually missed us here on the Gulf Coast and went up toward the Panhandle, didn't do much damage. But then we have Hurricane Lee, slid to the east, no problem here in the Gulf, but it's headed right for the Irving refinery in Windsor. You saw RBOB spike on that. Now, a lot of people don't even know what RBOB is that are watching us right now. It's basically gasoline futures. And these are the kind of things that have made me think that maybe the inflation is gone conversation. I don't want to be disrespectful to Jim or anyone else who thinks that inflation is over. It might not be over. So am I just crazy to always look for these things that might show the consensus to be wrong, or is that just a commodity trader thing?
I'd say actually a little bit of both. I think that when you are a commodities trader, what you're really keenly aware of is the delicate balance of raw materials. We are not at the Kathy Wood place yet where technology is so advanced and so efficient that we don't need raw materials. We need them. And clearly, the weather situation, I mean, Libya, by the way, is another reason why oil has spiked, because they had flooding that killed over 5,000 people.
Jesus.
Yeah. So yes. So to naturally worry about the balance and the supply chain and the labor involved and just the distribution and availability of raw materials is, I think, inherent to us commodities traders. But the second part of that, of course, is that we can't sit with our heads so worried all the time. And that's why I'm trying to say, all right, well, gold, I mean, which I figured would fly by now, hasn't really done very much. Silver hasn't done very much. So the inflation is very pocketed with oil and with certain food commodities in particular. So why isn't gold and silver rallying? So maybe it's relaying a different story. Maybe it's just completely out of favor. I mean, you know, of course, I'm always going to wonder. But that tells me that maybe I don't need to worry as much as I did. And that's why I started thinking about this normalization and how long or for how much longer will oil continue to go up? I don't know.
So you hit on gold and silver, which I'd love to circle back to that, but I had something about oil first, because one of the things I've been arguing about, and I want you to tell me if I'm just talking my book, because I've talked about inflation subsiding for the last 6 months. I don't think there's going to be any huge pickup. There might be, modest pickups like today, which was basically more of a math equation than anything else. If crude starts to continue to accelerating like it has, up 30% for the year, I argue that yes, it's inflationary. On balance, it's inflationary because of the cost push, because of the input price. However, it also is a liquidity reducer. It pulls liquidity out of the system and could march us closer to that recession that I think is going to happen. Is that just me pointing that out, just talking my book?
No, it's absolutely, first of all, everything is cyclical, right? I mean, that's the other thing you learn as a commodities trader. It's just so natural to know that you can catch these really great parabolic moves and then they're over just like that. We all saw that in great moves, and starting with gold and silver back in 1979, 1980. I was there in the oil pit when it went down to $10 a barrel, which of course these days doesn't sound like all that low, but it was a historical low in 86, and then watched it go over 100 during the first Gulf War. So, and then that was it. It died. So yeah, we're aware of that. So on that point, no, you're not just talking your book, because at some point, and it's the same thing that happens in real estate, when you have the supply and the pricing so out of reach, then demand immediately starts to get destroyed. I mean, that's what happens. The recession part, by the way, which I've also thought about that you're mentioning, Jimmy, is not crazy either, because it's possible that if it doesn't just happen as a spike and then come back down, if we have a sustained high level of oil prices and the Fed will see the demand destruction and then will become more dovish. And I think if they lower interest rates, and this is the danger why everybody's praying for lower interest rates, I'm not, is because that is actually a sign of a recession. If that has to happen, it means they're worried. If they spike and they can't control it, then they see the demand destruction and things really fall apart. They lower. That's a reactive Fed.
Are you suggesting that the Fed may not have everything under control? How dare you?
I only say if the world ended today, then you could say the Fed had everything under control. But
Bobby, I want to sneak in one more quick question.
Go, absolutely.
You mentioned gold, and you said you were disappointed in gold's move. I have the opposite opinion. I think the fact that the dollar's been on a relentless rally higher, real rates are relatively high. Even the 10-year's gone from 4.1 to 4.3 just in the matter of the last 2 weeks, and gold still kind of hangs in. I think that's relatively encouraging. Have you considered that?
Absolutely. I'm still long gold because of that very point. So, it's glass half full, glass half empty, talking about your book. I started out this year actually on Charles's show. He said, what's your prediction? I said, gold's going to double. Well, at that point, it was trading at 1,500. And it got up to 2,100, not exactly a double. The fact that it's sitting here at around 1,900, right, you could say, oh, is it waiting to crash? Or, oh, is that just such a great place of support, given everything you just mentioned, the higher rates and, of course, the higher dollar, that it means, oh, listen, they're stockpiling like crazy. We know that from all these different foreign governments. So, yeah, I'm still bullish. I'm just talking my book, a little bit disappointed that we're not back at 2000 yet.
No, and Bobby, going to throw you the question too, but to you guys, people listening, when someone says, I think it's going to double, what they mean is it's going to have a significant rally. I hate when these nitpickers are like, well, you said it was going to double. Shut your yap. It went up a lot. How's that, Bobby?
No, I actually think we should expand on that a little bit. We had Cameron Dawson on a while ago, and somebody, when we were posting the show on social media, somebody goes, she's been wrong all year. I'm like, you're an idiot. You know, when you're talking about a circumstance, this is why I like this kind of format that we do this in, because we get to get Michelle's entire view, and she can give 3 months, 6 month, 1 year, short term, medium, long term, and talk about how things can change. And based off of that, you're looking year to date at energy and materials being up over 5% from a sector perspective. What do you think? Do you think that kind of thing continues? By the way, I do, and I'm also still long gold, and I want to comment on that too. But I wanted to shift to sectors. When you look at the kind of market we have right now, where the Fed, in my opinion, missed an opportunity to say they would accept a little higher inflation, because we all know that if inflation doesn't come down in the next 6 months, they're likely to lean toward cutting or starting quantitative easing again, and inflation is still going to be above their 2% target, and they're going to get crucified for it. So do you still think things like energy, materials, industrials, and I'm not saying you thought this before, they've been great performers. Do you think that's going to continue?
I do. And actually, my best trades this year, well, we have two different types of trading that we do at our company. We have quant models that are pure math, that make their trading decisions based on trend strength indicators, our proprietary indicators, and then use a certain percentage of a stop and then profit targets along the way. And then we have the discretionary trading, which is basically what I'm doing. And so it's been so interesting because the quants were heavy long into NASDAQ and all the growth stocks, still actually are long Meta and NVIDIA and Tesla. This month, I've only made one trade, and that was at the very beginning of the month. They bought SSO, which is the leverage S&P 500. Good for your book, right? Somebody was saying about the 4490s, right? So, so from the pure mathematical standpoint, the growth stocks and the S&P 500 have done well. From my discretionary standpoint, and this is what I would say, my best trades have been in gold, in oil, in DBA, in sugar, specifically sugar, and interestingly enough, in Vietnam, which I caught it around 1150, and I'm still long, and it's trading at about 1540 right now. And that was more of a fundamental reason, knowing that China, our relationship with them might deteriorate and our relationship with Vietnam would improve. So the point is that in terms of the industrials and the manufacturing side, where is the money going in this country? And that's, I mean, we can get into government spending, but we know, which is also inflationary, but we know the government has been spending the money based on everything that we just said to bring the infrastructure and to bring the ability to manufacture here. And that and deglobalization also inflationary, but nonetheless, yeah, I've been really more into the industrials. Look at IBM is up today as another big blue example. So it seems to be a trend. How long it lasts? I think that one of the great things, and I would imagine you guys are the same as commodity traders, is that we're all about risk reward. We're all about taking profits on the way up, and I don't get too married into anything for too long, especially if it starts working against me. Like Vietnam's a perfect example. I had 100% of the position. I now have 60% of the position because I took a profit at 1530. I'd be, to me, use your word, idiot, not to do that because that's just greedy. So I'm not sure if that really answers the question, but.
Well, in fairness, I didn't invent the word idiot, but I'll take the credit for it.
It's a great word.
I got into a little bit of trouble this morning because I used the word idiot, and I don't.
Is that a bad word all of a sudden? Berkeley, I actually put it in a tweet recently, and the warning came up that like normal Twitter users don't use this language. I'm like, Oh, I've seen worse than that.
They're not in the same circles that I'm in because I come in contact with a lot of idiots.
Jimmy, real quick, 45, 10, 75 right now. So.
No, that's the D's.
Oh, what are you in?
I'm in. It's the one expires into SEP. I sure hope.
No,
This podcast is going to cost me a shit ton of money.
I'm going to put it up here. You asked your question. I'm going to get the SEP up for you.
Well, my question is about how much money am I going to lose with pin risk when my options expire in the money, and then all of a sudden it's down 20. Okay,
44,
so you mentioned
25. Go ahead.
Don't we have some kind of quad witching or something tomorrow too? Do you worry about that, Jim?
Of course, but I just had the Wednesday options on today, the ones that expired
today.
Oh,
I see the one day.
If they were I put them on 2 days ago. We have Monday, Wednesday, Friday.
ODTE? Are you an ODTE?
No, I'm not one of those crazy kids.
Jimmy's got a lot of GameStop. He's got a lot of A.
No, I have real CME listed Monday, Wednesday, Friday options.
Okay.
You mentioned Vietnam, and I wanted to touch on India real quick too. If we're really deteriorating our relationship with China, who are going to be the other beneficiaries besides Vietnam?
India definitely is one. Although I don't know if I fully, from what I read, could fully trust India because they have a lot of alliance with China as well, and with Russia, and with the Middle East. And so to me, I think if you really want to, if I had to get in touch with some kind of a gut feeling, a worry, as we said before, if you will, I know people go, oh, BRICS, that's a bunch of crap because look at the dollar, it's still strong. Don't worry about that. Oh, yeah, right. Real threat to the world's reserve currency. But at the same time, they have been growing in numbers. And there is definitely the East versus West sentiment that's building up. And I'm not so sure where India stands in that. They may be a little bit two-faced. Now, I always like to say I'm not exactly a geopolitical expert in that I study all of the policies of India, et cetera. But it's just from what I read and what I can digest from a more casual standpoint, since I look at stuff all day long, that's my sense.
Michelle, can you tell people how you trade or invest in Vietnam or India for people that wouldn't know how to do it from here?
Well, there's an ETF, and the ETF is VNM, which of course makes a lot of sense. Mm-hmm. And if I just could talk about it technically, so when I bought it down at around 11, it was bottoming out. And I'm also, as a commodities trader, and probably you guys as well a little bit, I'm a natural contrarian type of trader. But I'm not just contrarian to be contrarian. I really look for opportunity because I have to believe in it. And I could kind of see that Vietnam, sometimes it just starts with a consumer instinct, right? I would pick up clothing in a store and it started to say made in Vietnam instead of made in China. And I'm like, that's kind of interesting. So anyway, if you go to Vietnam, the ETF right now, and you look at a weekly chart, it has stopped right below the 200-week moving average, which comes in around 1550, 1560. I think it's trading about 1530 as we're talking.
As you talk, I'm going to go ahead and find a way to put it up on the screen. So keep going.
Would I be adding to my position or buying right now ahead of this major 200-week resistance? Probably not. So if you were interested in getting involved in that, I would say at this point, I would let it consolidate here. And if it doesn't sell off from these levels or really break down below 15 and gets through that 200-week moving average, we're going another leg higher.
So I noticed that you pronounce it Vietnam, which I also pronounce it Vietnam, but that's because of the Country Joe and the Fish song, 1, 2, 3, what are we fighting for? Don't ask me.
Don't give it down. Next stop is Vietnam. Yeah.
Okay, good. We're on the same page with that then. So
I only call it that because of Forrest Gump.
Oh, he did say Vietnam too. Yeah,
he did say Vietnam.
Mine
all right,
predated
I'm putting it into the room. The guys will put it up real quick. The daily chart of the VN, and I happen to have a 200, a 21 EMA, and an 8 EMA there.
That's the daily, right?
Yeah, that's the daily.
Okay, can you put up a weekly
sure.
and a 200-week moving average in there? Are you using TradingView? We use TradingView too. Some of our indicators are on there.
Yeah, that I can do for you as well. This is just, I try to use a pretty neutral platform simply because I want everybody to be able to replicate it.
Okay, so that 200-week, is that a 200-week? Because that's way higher than what I have on my chart.
Well, let's see what it lists out here. You can see this whole thing, right?
Mm-hmm.
Yeah.
I've got that as a 200 simple, it looks like. Do you want,
Well, it would be a simple, not an exponential.
yeah.
That's interesting. It comes in much higher.
Well, what if I did this? There, how's that look? I just got rid of it.
If you don't like it, we get rid of it.
Well, look at that beautiful, gigantic double bottom. So you can see why I was starting to get interested in it long before that. This was at the beginning of the year. Mm-hmm. And now, so the 200-week probably comes in right around that peak high that we had in, I can't see, was it October or November?
Right here?
Right there, yeah.
Yeah.
Yeah, it's December.
Yeah, December. So that's what we have to deal with in terms of the technicals. In terms of the fundamentals, though, I mean, right, Biden just went there. We've already made a commitment to continue with them. The interesting thing about Vietnam, too, is we joked about the war and stuff, but it did not become like Korea, where we had a North Korea and we still have a South Korea and North Korea. We have one Vietnam. And I think that's also been to the benefit of the country, and they're an incredibly industrious country. So
I'm just looking at something here, and I'm glad you got out of part of the position from the way that I look at things. I'm seeing an opportunity to take profits and then get back in with this sort of longer term divergence that we have here between volume. Now, these are not, it's not an RSI or anything. It's just a volume divergence. They're not that reliable, quite frankly. But if it were to come back off, to say this area here, I'm just speculating here. I'm not doing honest analysis, so nobody please run out and buy this based off of what I said. But if it were to come back down, some down in this area, and you saw volume start to spike again, I actually will get into this after some more analysis.
Great.
Can I jump in real quick here? Because my analysis too, Bobby, tell me wrong. Again, my licensing is for futures. I don't care what this chart is about. I don't recommend stocks, whatever, too. I see an outside week down. It's only a minor outside week down. It almost is a green candle. But I think if we take out that low, which is admittedly is relatively far away, if we take out that weekly low, I think we head lower. Does that concern you at all? Because look at those highs there, too.
Well, again, it doesn't, for me personally, and Michelle, please comment on this as well. For me personally, it doesn't worry me. It gives me a shot to get in this again.
Oh, get in right down there.
I think Michelle's dead on about the long-term trend is going to be away from China and toward Vietnam. It's not something we've talked about a lot, but it's probably something we should start looking at more often. It's a really good thing for people in this particular forum to look at from a structural perspective. Am I wrong in that assumption, Michelle?
No, you're absolutely right. And the reason why I'm not worried is because I am actually trying to get out of my comfort zone of more intermediate and shorter term trading into something that's a vision and not being worried if we have a bit of a correction in this. I mean, if you just go back a little bit, you see that other big nasty red bar?
That here?
Yeah, right. I mean, I mean, that looked like, oh my God, what
Armageddon, right.
Right. Yeah. And so I, for the first time, I actually put in a sell stop to think that I certainly wasn't going to turn it into a losing trade. Never got stopped out. And that's when I started talking about it again, about an add once we got back above that 1450 level. So, yeah, I'm not too worried about these sort of moves here because I'm really thinking that Vietnam could go up to, well, let's look at China. China ETF right now is trading at about, if you look at FXI, about 26, 27. Now, of course, China is much bigger than Vietnam. So I figured if we just sort of use that as some kind of a formula, if this is at 15 and that's at like 27, then maybe this is worth about 20.
Interesting.
Can I point something out here, Jim, real quick while we're on?
Sure, of course. Yeah.
If I just take a random look at this particular ETF, this is something that I'm positive you both have experienced. One of the things you learn trading commodities first, right? And I'm going to use this phrase because I always look at candlestick charts, is to not live candle by candle. Because if you look at this particular chart, I mean, you've got a series of 4 down candles here in this May area, right? And then you turn it to a weekly, and basically you compress that into essentially one fairly good-sized down candle in May here that then reverses over the next 3 weeks. And, I like to point that out to people because when you live candle by candle, I don't need to look at this chart anymore. I don't know if you guys do, but when you live candle by candle, you tend to stress yourself out in an unneeded way. And one of the things that Jim and I have professed in the years we've been doing this kind of work together is to establish your risk and not worry about it so much. You know, I mean, Jim has options expiration risk, which is a completely different conversation right now.
Right.
But when you're looking at trades, Michelle, do you basically say, this is what I'm going to risk? Or are you staring at your screen all day and not enjoying your life? I think I know the answer to this.
Well, you know, I ran a service for 14 years. It was Mish's Market Minute Premium service where I had at one point, well, I had hundreds of subscribers. And I tend to be, you know, I was a local on the floor where I didn't have to worry about anybody at the end of the day. It was just myself. I could beat myself up if like nobody's business, but at least it was myself. And when I all of a sudden had the responsibility for hundreds of people that weren't just names that I didn't know, but people that would call me and say, you know, I really trust you, and I'm putting my entire life savings, you know, into the account to trade your picks. You know, then I became a little bit hyper focused on the ticks. I gave up that service on Valentine's Day this year. That was my Valentine's Day gift to myself. And we have an asset management company, so my discretionary trades go into the asset management. We have a percentage of that dedicated towards the discretionary trades. And these are high net worth people. You know, obviously they have to be vetted to be able to qualify. And I worry about them. You know, even if I know them, I don't worry about them. And as a result, I do exactly what you say now. I've actually, but that's what I love about this business. You can be in it for so long and still get better and still learn. And so what I've learned this year is to really relax and not think so much about the screens. I have my bottom line risk. Sometimes it even gets that risk and I may change my mind. Gold's a great example. There's a couple of times where it reached my mental stop and I'm like, I'm not getting out. You know, you're right. But I try not to get too stubborn. So yeah, I've gotten better and way more relaxed. And as a result, a much better trader. You know, oil is a great example. I bought it at $68 a barrel. I have a stop now. I raised my stop, but I actually still have over 40% of the position left, which is strange for me because those corrections I would have been out if I had a service.
And this is something I wanted to bring up really quick too, is, you know, a lot of people subscribe to these services, and I think we'll give this whole room some advice right now that I also did the service route for a brief period of time, and I gave it up pretty quick. And the first thing was the service was launched, was marketed, there were a bunch of people bought in, and about 3-4 trades after we launched, somebody emailed me. I put $10,000 in, I put $3,100 in each trade, and we lost on every one of them. You suck. And I remember thinking, who the hell told you to risk 33% of your investable capital on the first 3 trades? First 3 trades were losers, the next 9 were winners.
Exactly. And that's
I look at them like, who the hell told you to do that? And if you micromanage each person's risk, you lose sleep over their lives, not your own. And that's just
exactly that. And also, you know, in terms of, we stopped a 30-day free trial too for the same reason, because they could just catch you on a bad month. We know we're traders, right? We streak. And if somebody catches you on a bad streak, then the next 3 months you have a great streak. So I would say to people, no trial.
I've seen Jimmy streaking. That's not a pretty sight.
It's fantastic. It's a lie. We were just talking about those ODTE, the 0 days to expiration traders, and how that's exploded. And my theory on this, and I'm curious if you do too, I don't want to talk about markets again too, but a fool and his money are soon to part. And you guys were talking about, you know, the guy who puts 33%. What do I give a shit if they can now go broke in a day? I remember I had this one intern, and we were going to hire him. And he was like, but if you feel strongly about it, why don't you do a 500 lot? And I'm like, because feeling strongly about it and risking your entire capital is a vastly different thing. Yeah. So the ODTE options, I don't think is a huge deal. Michelle, do you?
No, I've been asked this a lot actually in the media, particularly when I go on CNBC Asia, because they love to query me on how much influence I think meme stock traders or ODT traders have on the overall market. And I always say the same thing. You know, essentially, it's a flash in the pan type of situation. So I feel that way. We've been in this game for a long time, so we know you have to really be strategic. And there's no easy money. And you're right. People get killed constantly. One of the great things about being on the floor was you got to see who really survived the years and years and years and who was going to get carried out, and when it was just a matter of time when that would happen for a host of reasons. So you learn all the bad habits.
Sure, and it's contact hitters last, not big swinging home run hitters. And by the way, when I said a 500 lot, I was talking about the 10-year or the Eurodollars. So I wasn't talking about a stock 500 lot. I was talking about a major position. Right. Can we switch to oil real quick? You guys have both mentioned it once. You guys both know shit ton more about oil than I do, but I do know about technicals, and I know about a couple things. I've been beating the oil drum for about 6 months. Part of it was fundamental, which is somewhat unusual for me. And I thought once it got through certain technical levels that our friends who are pissed as hell that we sold the SPR to lower the price of their commodity that they sell, were going to put the screws to us. I think it's happened a little bit. Does it continue, and does oil go to 100? Fish.
Well, people keep looking at this $90 a barrel as the end-all be-all. I actually thought it was $80 a barrel. So as far as I'm concerned right now, we're in a breakout. And yeah, from a fundamental standpoint, I mean, probably might go down, and I'm not even sure whose fault this is, as one of the greatest policy mistakes was not buying back when they had the chance under $70 a barrel.
What the hell?
What the hell they were going to do?
Right.
Which, so why would they tell people they were going to do that also and then not do it? Like everything wrong.
Right.
Sorry. Yeah.
Yeah. No. It's a head scratcher to realize that. So now here we are, much higher, and you know they're not going to buy it back here. And if anything, in an election year, I think they're all trying to figure out how they can actually release more, just sort of on the hope, the hope that oil prices start to come down before that. So I think everything fundamentally and even technically, and it's kind of like what we just talked about Vietnam, a couple of days of correction is not impressive to me when there is such strong fundamental picture. And maybe that's me grown up a little bit now, where I love to be a technical trader and I believe in price and charts more than anything. But I also have a logical brain now based on experience of seeing what happens with fundamentals and knowing that until we see some clear changes, well, we're not going to drill. That's not going to happen. And even if we did, it would take a long time to get that oil out of the ground and then distributed. And B is, we know the money here is more going into alternative energy and not in traditional oil and gas. And C is, we also know that the Saudis have us really over a barrel, pun intended.
Bingo. Ding, we should have a bell for that.
And that's where exactly they want us to be, under their thumb.
Bobby, $100 oil, yes or no?
I'm sorry?
I said, Bobby, $100 oil, you say no?
No, not in the short term. Goldman Sachs is looking for 107. My target's actually 91.30, which I'm going to get out of my trade at 91. And the reason that I say that is this. There's always a difference between what OPEC says they're going to do and what actually ends up happening. And notice that the extension of the production cuts was not OPEC, Saudi Arabia. If you look at the data from last month, OPEC as a whole, their production went up by 24,000 barrels a day. And that's because Iran and Nigeria increased production. Iran's now at 3 million barrels a day. Saudi Arabia cut by 88,000. So they didn't even cut by the 100, and which is, it's not an exact science. So that's not anything they likely did deliberately. But the supply is still kind of flat. And while I think part of this is storm risk finally being recognized. Again, the Irving refinery in Windsor, Canada is likely to get hit by category 4 or 5, which is going to shut it, as Michelle mentioned. Libya shut down 4 ports because of Storm Daniel, and they're not able to get their refined product out. So there's some sort of push and pull between supply and demand right now. We're going to go into the summer driving, or to the winter gasoline, which is cheaper. We're going to get a reduction in demand off of the winter driving season, which is a little bit slower. But I don't think we go back down to 60 by any stretch, because the long term, yes, 100, yes. I just think we're going to go through the winter with probably a new higher range as opposed to breaking out toward 100.
I have a comment and a question.
Shoot.
So yes, I can see that too. And actually, I that's why I take profits, right? Because I'm not going. I was in oil. That's where I spent the bulk of my years, by the way, on the floor. I was in NYMEX. So I traded crude oil. So that my comment is yes. I mean, I think $80 a barrel, a correction is possible. Do I want to sit through that? No. I would much rather be out and then buy it back if it holds 80, and then I would have a very tight risk. My question is this, since we brought up gas, I'm actually starting to talk a lot about natural gas. Because the disconnect between the oil prices and the natural gas prices, and this is also, right, as a commodity trader, don't you wait for these rubber band stretches of ratios until they're unsustainable? I mean, that's really what got me interested in commodities in 2020 before COVID, because the ratio between equities and commodities was at a 100-year low. You knew something had to happen to change that. So now the same thing I see in natural gas versus oil. And yes, I know that we haven't had exactly the demand, although China's now been buying natural gas. And Europe was sort of counting on another possibly warm winter, but it could be a very cold winter. I just think at $2 or $2.50 for natural gas, you don't have a lot of downside. And I think you have nothing but upside. What are your thoughts on
my
that?
quick answer before Bobby has a real answer is that that goddamn natural gas is the reason I'm not retired right now, the Widowmaker trade. It never does what I think it's going to do, and I try to pretend it doesn't even exist. Bobby, you probably have a better answer.
I think natural gas is a screaming buy, which is why I don't own it. Because usually when I think something is a screaming buy, it's like betting on the Bears against the Packers. It's just a dumb idea. But to your point, European stockpiles are 60% lower than they were this time of year last year. They are not stockpiling for the winter, which is what they did last year. And they did a lot of it last second, but that availability is not there right now last second. So if there is a harsh winter in the EU, which because they think it's not going to be, same theory as me thinking something's a scream and buy, it probably is going to be harsh. They're going to meet a lot of trouble. They're not going to have their natural gas costs are going to be triple what they were last winter.
Bobby, can we put up a chart of nat gas and maybe we'll do a quick thumbnail? It's so funny. Like there's a moment like I forget we're actually doing a podcast. I'm like, where do I want to trade this and probably lose money again? Because I do think, I think that the last couple mild winters too, I think everyone's kind of forgetting what the potential is. And mild winters in both Europe and here. Jesus Christ, look at that thing.
Yeah.
That's a weekly, man. I mean, look how long it's gone sideways.
Exactly.
God,
but that intrigues me. And my liberation from not having a service, so having to worry about fluctuations of 20 to 30 cents a day is really making me even stronger in terms of my conviction that if I just hold out and we get through, let's say, $2.80, depending on what contract you're looking at, that to me means we're starting to break out of that whole base. And even if it just goes to 340, that's good enough for me. That would be a nice move up, and I'll take some profit and either put in a no loss stop or say it has to hold 3. I mean, that's kind of how to trade. The key to natural gas, I did really well in natural gas last year, in 2021, excuse me. I made a fortune. I bought UNG, the ETF, because I had a service and they don't trade futures. And I held it from 11 up to about 30. I mean, it was like amazing. Talk about an actual double. And then I got out and that was it. I haven't touched it until the last couple of weeks.
So I'm going to put up UNG now, but I just want to point this out. I already had this line in the chart. And I remember looking at this chart thinking, I mean, since 2016, we've only been at this level 3 times. Here you got COVID. Here you got the Russia spike, the Russia-Ukraine spike. I mean, you just go back. This is a continuous contract. So it's 2012. It's 2016. It's 2008. Well, that doesn't make any sense. It's 2020. And it's now.
Bobby, before you get rid of this chart, can you go like a 6-month daily just to see where the buy is on the shorter term, and then we'll run to UNG?
Yeah, let me stretch this out so it makes more sense. I want to stretch it out a little bit too. So basically here's what you're looking. This goes back to, let's go back. This is basically March right here.
I see where I want it already.
Yeah. And this is the thing.
Yeah.
And Michelle knows this as well. And you comment on this if you'd like to, Michelle. Energy has characteristics to it. And this is why I'm glad. Let's put up the ETF as soon as I'm done here. And you guys can comment on this as well. UNG is what it was, right, Mish?
Mm-hmm.
Okay. So Energy has characteristics. It's a pure supply and demand market, which is one of the reasons I like trading. It doesn't have CEO scandals. It doesn't have gap versus non-gap. It doesn't have a one-time write-off for acquiring a company it shouldn't have acquired. It's just how much is out there and how much do people want to buy it? How much do they want to use it? That's one of the things I love. And what you see in energy markets is supply and demand sort of equanimity until it doesn't, until there's a breakout one direction or the other. And when it breaks out in one direction or the other, it tends to trend till it finds its new supply and demand equilibrium. And this is too long, in my opinion, for natural gas to be in here. I'm going to put up UNG.
By the way, while he's putting that up, Mish, a confession that when we get high-end guests like you, we lie to them and tell them we're going to keep them for like 20, 25 minutes, and then we keep them forever. Like, you're going to be here all night. No, we're going to wrap it up soon, I swear to God.
No, I didn't know what to expect, so I'm having a great time. I do have to have a bit of a hard stop because I have a commitment in about a half an hour. But
no, we're only going to go about 5 more minutes, I think.
Okay. They're actually going to take us off air in about 6 minutes. So.
Shut the hell up. Yeah.
After you put this up, I want you one last chart in terms of commodities. Again, it's an aggregate of a lot of commodities in an ETF, but you should have a look at DBA.
Okay, so this is UNG. What's that level? Those highs.
This is UNG, and you can see this
is
it's
like
around
7 something, right? I believe
the high right here is 808.
808, okay.
So again, UNG, it looks basically like the NG future. So for those of you that are just stock traders, what else did you want, Mish?
Well, before you put that up, I just want to mention one other thing. So one of our proprietary indicators, one of the things again, innately as being floor traders, is there's price and there's momentum. You can feel, see, hear, taste momentum when you're trading in the pits. So what we did was we developed something called real motion, which is a way to track momentum through these ratios and moving averages that we use, and we plot it. The momentum indicator on UNG is in such a bullish divergence where this is so underneath its moving averages and in a bearish phase. The 50 is actually above the 200 in the momentum indicator.
Wow.
And the actual momentum price itself is sitting above. So it's bullish momentum compared to price. Now, that doesn't necessarily always confirm. You need the price confirmation, but it's certainly a heads up.
All right, what else did you want to look at?
DBA, because I was on stock charts yesterday with Dave Keller. I did this thing I do with, again, all guys, called Charting Forward. And so they said if you had to pick one ETF to hold for the rest of this year, what would it be? And I picked DBA, which was bold because, obviously I'm on with people who don't trade commodities. And so it was bringing a commodities perspective to the equities people.
Does this look right to you?
That is right. Yes, that is absolutely right. So again, beautiful. This is why people don't understand commodities. They think, deflation when they start to see it go down. And I'm like, natural volatility of commodities. We can see 40% corrections, but that doesn't necessarily mean anything. It just means more of a buy opportunity. So if you look where DBA is actually closing today at 22.13, look at the peak that was in June, around June 20th. What was the high there that day?
The high there is 22.13.
Right. So to me, if you want to look at, some people could look at this as a big bottoming. You have a big series of higher lows there, as you can see. But if you wanted to be like the bear in the room and you say, well, it looks like a potential head and shoulders top, which it doesn't to me, but somebody could say that. That 22.13 that we're closing at today, it tells me that I'm not so worried about the peak high that we had a few months later. It's that number. We get through 22.15. And I don't see any reason why this can't. It's a slow mover, but I don't see any reason why it can't go much higher. So what's the implication?
So I just put this.
Do we need a settlement above there, Mish? Or do you just need a trade above there? Do you like a settlement to confirm?
I like settlements. I've been so into closes lately. I can't tell you how much money it has saved me to use my stops on closing bases
Agreed.
or entries on closing bases as opposed to intraday, because there's so much chop and noise.
So I just put this GAN extension in here for the sole reason that one of the things we do as a component of one of the models that we trade at Path Trading Partners is we look at the most recent longer GAN extension. And basically what this tells me is that if it closes above 22.23, so that's right on here, right? I mean, the high is 22.13. Closes above this, that's above the 75% retracement, which means the extension is likely to take us to at least 22.80.
Yeah, and that, I mean, it doesn't sound like much, really, because it's an ETF. But if you think about what it represents, all the agriculturals, all the soft commodities, if you will.
Inflationary?
Yeah, exactly. I mean, and that's independent of oil. Some of this, of course, is on the basis of oil, but a lot of this is independent of oil. And so there's really two things going on. And that's why at this point, going back to our very beginning of our conversation, I hope and pray for some type of normalization between CPI and Fed funds rate, which means that we can sort of go ahead at a pause, not hope for an actual reduction of rates, but at least a pause and inflation to stay the same. But I fear and worry about the fact that that may not be the case.
All right, let's wrap this, people. We can't keep Michelle all day. By the way, I find it, I've been doing this for 35 years. I've been in the media part of it for 15 to 20 years. And the fact that you and I have never been on shows together, I'm irritated with how fantastic your viewpoint is. So hopefully this will be the beginning of a beautiful relationship. Bobby, got any last words?
Yeah, Michelle, can you tell people where they can find you if they want to? Obviously, Twitter is one of the places. And we'll give you a link to post this and send it out so people can watch the replay.
Well, Market Minute is my X handle. I'm still trying to get used to saying X. Marketgauge.com is our website. I write a daily. When I say daily, most days I write one. And that you can subscribe to on the website, and it's free. And then, of course, we also have MarketGauge Asset Management Company. That is our asset management where we take all of our quant models and the discretionary that I talked about earlier, and we can either teach you how to trade or manage your money. That's kind of,
And what the hell was that noise? Is someone trying to play us off like we're on stage? Is that yours, Bobby? I like it, though. All right, it wasn't mine either, I don't think.
I don't think it was mine. Maybe it was.
That might have been our 2-minute warning from the guy.
Guys, we can't go
Give
all
me
day.
44, 70, 50, so you're good.
I'm fine, yeah, good.
Yeah, you closed green. You closed green. Think about that.
Yeah, that is nice, too. That's a good deal.
Right.
I don't have to worry about my options. Thank you so much, Mish. It was a ton of fun talking to you. It really was.
Oh, yeah. I'd love to come back, guys. It was really fun.
Please do, yeah.
Right.
See you guys. Thank you.
All right. Take care. Thank you.